Okay, everybody, it is me, Gregory Mannarino. It is Tuesday, September 28, 2021. This is my lovely, of course, post-market wrap-up, people. What a day. A statement from former chairperson Janet Yellen sent this market, crude oil, into a tailspin after being higher earlier in the day. What did she say? So again, former Fed chairperson Janet Yellen explained that we're about to run out of money. The United States, the richest nation on earth, if you listen to a mentally retarded, leaders. Oh, really? What are they leading us to? How about leading us all to the slaughter if you listen to these imbeciles? So the richest country in the world is about to run out of money if they don't raise the debt ceiling. Janet Yellen warned of a calamity, of a financial meltdown. Well, the market didn't like to hear that. So we finished lower across the board. Crude oil was surging earlier. Reversed, finished lower. Doesn't matter. Crude oil, people, remember I'm telling you this. It's going much higher. Much higher in this environment. There is no doubt about it whatsoever in my mind. It's just a matter of sitting back and just watching the action. So I wrote down so many things today, pages of stuff. I can't even talk about it all because I'll be here too long. But we'll cut through the nonsense and the garbage and the dog shit, and we'll put this all together. So like I said, stocks falling under pressure after Yellen stain. Let's not forget her real name, Janet Yellen stain. Yeah, she's a stain upon the earth as well. She spooked the markets with her calamity and her meltdown, financial crisis. Okay, whatever. I don't care. I really don't. We're going to see how this thing plays out, and we will stay on the right side of this. There's no doubt about it. This whole thing is a shit show, and you will all know that. So the richest nation on earth, we're so rich, we're about to run out of money. You make it up. Make that up. I dare you to do that. Okay, people, let's talk about a couple of other assets. Actually, let's refocus on the MMRI, Mannarino Market Risk Indicator. This is not a day trading indicator. People, stop. Is something really wrong with many of you out here? Did I say this was a day trading indicator? I'm getting all these comments and emails and stuff. No, I did not say that. This is an indicator that measures overall market risk, not per day, okay? This indicator, this MMRI, it's fine. We're sitting fine here. We're still in a low risk zone. Actually, let's see what it is exactly, because I didn't check it prior to the market closing. I'm going to let you know what this is right now. And if you want to find out more about this little indicator I came up with, which people, you think what you want. There's going to be a lot of really misinformed people trying to conjure up all kinds of things to mislead you. But the fact of the matter is, I have back tested this, and it works. I invite you to back test it, okay? So we are sitting at 89.3. 50 to 100 is low risk. Moderate risk, 100 to 200. High risk, above 200. Extreme, above 300. So we're sitting pretty here with this. Nothing going on here. In my opinion, this dip should be bought. According to that indicator, this dip should be bought, and it should be bought. Period. The freaking end. Let's move forward here. Gold and silver falling under pressure yet again, and I continue to hear from more and more of you. I get it. I understand. Look, if you're frustrated, join the party. But at the same time, it don't faze me at all. These are long-term holds. You know that. The debt is in a hyper bubble. Tell me I'm wrong. Tell me that the debt is not in a hyper bubble. We have a risk-on environment right now, despite the fact that the market took a hit today after what Janet Yellen said. We also heard from the other thing, Jay Powell, today, and we'll talk more about that too in a moment. So when you have a risk on environment, these things happen. Cash just moves out of assets and goes into the stock market with margin debt now at another new all-time record high. But you must be hedged. You must be attacking this from every angle. And that's why you are holding physical gold, physical silver. You're trading the market if you are so inclined. You're owning large cap dividend paying stocks if you are so inclined. You're in the crypto space if you are so inclined. Now with crypto, I told all of you yesterday or today, I think yesterday, crypto is going to fall under more pressure. I am certain of it. Okay, so just be ready for that too. It's a volatile space. It's not for everybody. But personally, I think it needs to be in your portfolio. You know my take on this, people. You know my take on this. 10-year yield higher, no surprise. The dollar higher, but again, instead of focusing on these things individually like we used to do, I know a lot of you are fixated on that number. Forget fixating on the number. We're going to look at the MMRI, which takes the debt market relatively as a whole and puts it into an equation that we can follow very simply. Okay. And again, for those critics out here, I dare you to back test it. I dare you. Instead of coming out here just trying to make me look bad. Oh, Greg's indicator is stupid. Doesn't work. Duh. Mental retards. That's what we're dealing with here. You can't make this stuff up. But like I said, I dare them to back test it. Look at the last several market tops right before the crashes, and you tell me where that indicator was. Rocket scientists that you are. All right, so let us move forward here. Let's talk about this real quick. So yes, the entire market fell under pressure, but more so tech. Why? It's that rising yield environment. You have to understand why this mechanism is occurring here. There's a mechanism with regard to the tech sector that is priced in that, unfortunately, when rates rise, well, it hits the tech sector more than any other sector. Now, understanding that mechanism, just sit tight here, okay? The market needs to find a balance, and I think it will. The market is trying to do several things right now. It's trying to price in what the Fed may do, okay? Is there going to be a rate hike sometime soon? But again, gauging from the MMRI, we're sitting pretty. We are sitting pretty, and I want you to start focusing on that instead of what the 10-year yield is doing in the dollar, because I told you there is a mechanism here. I've told you this for years. And I found a way, I think at least, that works to combine the two into a rational number that we can understand. So anyway, like I was saying, with regard to the NASDAQ tech sector, this is the discounting mechanism that it gets priced in to tech stocks when yields rise. But sit tight there, okay? Sit tight with regard to that. Let us move forward here, people. I'm actually going backwards. So not only did we hear from Janet Yellen, again, warning on the market, calamities and crashes and everything else here, we heard from Jay Powell, the Fed chairperson. He's the same bullshit, okay? Economy will improve in this second half. The economy continues to get stronger. And then he was asked several questions about insider trading. Did you catch that? We have two Fed presidents, Rosengren and Kaplan, who are resigning. There's no arrests here. They're just resigning, being caught insider trading. But you see, Jay Powell himself, he said this. It was a coincidence that he just happened to be buying the same assets that the Federal Reserve was buying. So the Fed chairperson himself is caught up in this. But you think there's going to be arrests? Do you believe that the current Fed chairperson is going to be taken away in handcuffs? How about there's just no way that that's going to happen? There's them and there's us. And I think you know that. Oh, we found this out too. With regard to economic news. So our trade deficit continues to get worse. Imagine my shock. And Powell, going back to him, he admits, I'm all over the place with this, that inflation issues are not getting better. In other words, they're not so transitory as that lying piece of dog shit tried to convince all of us. You can't make this stuff up, people. So U.S. consumer confidence basically fell off a cliff today. Another piece of economic news, as inflation continues to surge. Let me ask you, people, all of you, seriously, do you believe that a person, let's say like Powell, insider trader over there, should be held accountable for lying, for telling the American people that inflation was not widespread? In other words, it was contained, that inflation is not, he's not worried about inflation at all because it's transitory. But consumers here clearly realize, okay, this is the news today, consumer confidence plunges on inflation worries. And it's getting worse. It's going to get much worse. A second wave of inflation is coming. It's going to be bigger than the last one. So do you believe that someone like Fed Chair Powell should be held accountable? He won't. No matter what you say, no matter what you believe, these people are untouchable. Absolutely unfreaking touchable. Can't make this stuff up, people. You really can't. You know what? I got a lot more stuff here, but I think I'm going to end this video. It's getting kind of long. I don't like them when they're too long anyway. So let's just summarize real quick. A market today that took a hit on the back of a warning from former Fed chairperson Janet Yellen of calamity, financial crisis, meltdown, because we're about to run out of money. The richest country in the world. It's a joke. We're the biggest debtor nation in the history of the world. We owe more than any other nation on the world. If you took all of them and combined it, we owe more than all that. We're the laughing stock. We have been the laughing stock of the world for years. Okay, and no one wants to do a damn thing about it. Every president will continue to borrow more than the previous one, just like Trump did, just like Obama did, and everybody else. They must continue to borrow more cash into existence. What they can't tell you, what these people won't tell you, is the debt-based economic model demands that more debt be borrowed. And here's the proof. It's in your face. We're about to run out of money. Okay, the richest nation in the world about to run out of cash. That's because we need to borrow more into existence just to sustain where we are. So Janet Yellen is correct. Without more borrowing, we go back into Mad Max. It's just over. The way of life that you think you're this fantasy land around you will change overnight. I don't believe they're going to allow the debt to default. If they do, that would be pretty epic. It would be a first ever in history, and it won't be pretty. But again, we're heads, you and me. I don't care what happens. I really don't care. I don't. All I want is for you and for me to be on the right side of this. And we're going to stay there. Period. The end. I don't know another way to put it. All right, people, look, lots of important stuff in this video. Please comment here. Let me know what you think. What do you believe is going on? Is the United States going to actually default? What's your take on it? I want to hear from you. I will read the comments, and that's it. I am like so out of here. See you in the morning.